Good morning, everyone. Welcome to Pre-Bell with William O'Neill India. My name is Rajashekhar Kongari, Equity Research Analyst, part of MarketSmith India team. Before we go ahead into this podcast, the disclaimer for this presentation is that whatever stocks we discuss are intended only for educational purpose, should not be taken as an investment advice. Here is the daily chart of Nifty taken from our website. Uh, we like to look closely at the price action of Nifty to get an overview of the general market and what are the levels we are looking into, and also we'll give an O'Neill perspective looking at this chart. Starting with moving averages and recent action, Nifty has been trading near 18,000 level and its 100 DMA, which is a pink line here. There is no clear momentum on either side, and Nifty is just consolidating and it is moving nowhere. That is because currently it is below its 50 DMA, so there might be some resistance when you talk about 50 DMA. You can see previously also 50 DMA acted as a slight resistance for the Nifty. It has tested that level and it was not able to close above that level. That indicates there is no definitive strong buying among the stocks in the market. That is a clear sign why the index is facing resistance at its key level, that is 50 DMA. On the downside, we have good support at its 100 DMA. So Nifty has been oscillating between its 50 and 100 DMAs in the last 1 month. If you look at Nifty's action. Coming to O'Neill's perspective, we are in rally attempt. Recently, we have changed the market status to rally attempt because the Nifty held on to its recent correction low of 17,760 level, which happened here, and it was not broken in the next couple of sessions. So we have moved to rally attempt. From here, we are looking for a follow through day on the Nifty index, which is not happening recently. Also, we were in rally attempt and we waited for the follow through day, but it didn't happen. That is because fresh buying is not happening in the markets. Follow through day happens when fresh investors or any macroeconomic positive outcome comes out, or any big companies like Reliance, HGFC companies, if they come up with good set of numbers and the growth projections are good, then a strong action will happen in the market. Until then, we'll be staying on the sidelines, and in the next 2 weeks, budget will also be coming out. So definitely, that is the biggest macroeconomic event happening. So that will be definitive factor whether the Nifty will rally higher or succumb to selling pressure. So please be watchful of the budget announcements as well. We'll also be coming out with preview of the budget. What are the expectations from the budget on various sectors? We have been analyzing and we have been drafting those budget reports as well. It will be out in the next week by our team. So coming to methodology, we are in rally attempt. We are looking out for stocks which are forming good base patterns and which are trading near the pivots and which are ready to break out as soon as the market gives a follow through day. We have been keeping a few stocks in buy watch list as well, and as soon as the market structure improves, then these stocks will definitely outperform the market and which will be added to modern portfolio as well. On the downside, if the Nifty reaches its recent low, that is 17,760 level, another 300 points from here, we will be back to downtrend, and the next support for the Nifty is at its 200 DMA, which is another 600 points from the current market price. As the ending season is going on, lots of companies have been coming up with their results for the December quarter. Some of the few leading companies in their sectors are taken here for analyzing. One is FMCG major, that is Hindustan Unilever. They have come up with their results, and revenue from operations grew 16.3%. This is year-on-year basis to 15,000 crores. If you look at the domestic sales, the volume grew only 5%. Ideally, volume growth should also be in line with the overall revenue growth, but that is not happening. Whereas profit was up nearly 12% compared to revenue, which was up 16%, because standard profit was impacted because of an exceptional loss the company has had to make in their P&L statement of 102 crores. PVR, which is an leading exhibitor company, cinema exhibitor company in India, came up with a good set of numbers. If you look at the revenue-wise, the top line increased more than 53% year-on-year basis to 940 crores. For the December quarter, the company turned profitable and they have reported a profit of 16 crores, whereas in the previous December quarter in 2021 December, they have reported a loss of 10 crores. Canfin Homes came up with their results, which were very positive. If you look at net interest income, which is an net basis of interest the company earned minus the interest the company has given out, uh, has increased 22% year-on-year basis to 250 crores. PAT has increased 30% to 150 crores. Asset quality has improved significantly both on gross NPS and net NPS. NPS have improved 2 BPS to 0.6%, whereas NNPS, that is net NPS, have fallen 5 BPS to 0.3%. If you look at GNPS and NNPS, fall in those numbers are considered positive. BHEL, Bharat Heavy Electronics Limited, has received an order of 300 crores from for the manufacturing of steam turbines and modernization of steam turbines. This is in Gujarat, a thermal power plant. So these stocks will definitely be under radar. And if you have any of these stocks in your portfolio, please be watchful. Any volatile action can happen in these stocks. So coming to today's action on the earnings front, Reliance, which is a major company in India, will be coming out with their results. Some of the banks, Union Bank, that bank will also be coming up with their results. Some of the other companies which are in the list to announce their results are JSW Energy, JSW Steel, IEX, COFO, HDFC Life, which are the leading companies which will be reporting their numbers. Yesterday, institutional investor activity, if you look at foreign institutional investors have turned net buyers, which is a positive sign. They have bought nearly 400 crores of equities, whereas domestic institutional investors have sold 129 crores of equities in the Indian market yesterday. US market has closed lower yesterday, almost 1%. Three major indices which we track: Dow Jones 0.8% lower, S&P 0.8% lower, Nasdaq 0.9% lower. So definitely negative views are coming from the US market. Asian markets are not taking those negative views. They are trading mixed. Shanghai and Nikkei in positive territory, even though the magnitude of their numbers are not so high. Kospi is trading 0.2% lower. SGX Nifty is indicating a flat to positive opening on the index front. Yesterday, Nifty closed at 18,108 levels. So 30-40 point higher opening is not considered a major higher opening. So it's mostly a muted to flat bias opening we might expect on the index. We want the index to rally higher and reclaim the TDMA. Until then, we might be on the sidelines. Also, 18,200, 300 level also will be turning the switch on for buying. Which if the buying volume is also on the higher front, definitely will filter out stocks and will be adding stocks to our portfolio. On the chart of the day, we have picked Siemens India. The stock has been looking very good and forming a very good base pattern. Currently, the stage 2 consolidation base pattern. The stock is just 3% to its pivot, and the volume on the updates is also very high, indicating significant accumulation happening in the stock. That can be told by looking at the ABD rating, which is A minus, considered a top class rating. On the moving averages front, the stock has been trading above those levels. Again, a positive sign. Earnings wise, the stock reported very good set of numbers last 2 quarters. That's why EPS has improved significantly to 89. A top class rating again. Technical ratings are slightly lower in terms of price strength rating, that is hardest rating. This is because the stock has been consolidating for the last 3 to 4 months. That is the reason it has been come under slight underperformance, and RS rating come down to 67. But as soon as the stock breaks out from the breakout base pattern, definitely we'll see RS rating above 70 and very good contender for addition as well. Thanks everyone for joining the session. Have a very good trading session.